All right, hey everyone. Hold on a second. Adjusting my microphone. How's everyone doing today? Mark here, Mark P Markets. Welcome to another Bitcoin analysis stream. Okay, so I want to get this started quickly. But quite a few things to go over. First thing I want to mention is if you're new to the stream, welcome. I do these every Monday at 3 p.m. Eastern Time. And here's how it works. First, I run through the economic calendar real quick, which, it's going to be very quick. Then I'm going to go through my Bitcoin analysis. Okay, we're going to look at price action, potential scenarios, and potential setups for the coming week. And then I'm going to answer your questions about stocks or altcoins or whatever market you'd like to see. So if you'd like to see a particular market or stock, please share your question in the channel now. And once I complete my analysis, I will get to your question. All right, please be patient. I'm going to try to get through this as quickly as I can. Also, if you want to share what country or what city you're from, that's always a fun fact. All right, so let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. And let's now get to my screen where I have the chart. All right, there you should be able to see me. All right, hey everyone. Let me just go back over here. Okay, cool. So I see quite a few questions in the channel. I see all my people. All right, let me see. Just say. Let me just say some hellos here. What do I got? I have. Hey, hold on. I have Thomas. Good to see you. Kai, Steen. All right, Joel. Hey, Schwartz, my international man of mystery. Been missing you. Okay, I notice when you're not here. All right, good to see you. Winter Fresh, we got Will. All right, we got everyone here. All right, Dave, good to see you. Alex, all my people. DJ, hey, I saw you in there. Cool, good to see you all. Thanks for stopping by. All right, so first things first. Today is Monday, and the first thing that you should do on a Monday is check your economic calendar. Let me just move this microphone again here. It's bothering me. All right, so check your economic calendar because you want to make sure that you want to know what important events, economic events, can come out during the week that can affect your risk. Okay, there's no trade strategy around this. It's just so that you can control risk in certain situations. Perhaps you have a position on that you need to adjust to stop or something like that. Okay, or maybe you need to take something off the table because you're going to run into a report that can go the wrong way on you. All right, so this week there are only really two things worth mentioning. Tomorrow, which is Tuesday, the 24th, New Zealand has their rate statement. So if you're in a New Zealand Forex pair or something like that, it can have an effect. Usually it's not a big market mover, but it is potentially, it can move something, right? So that's Tuesday. On Wednesday, which is the 25th, we have the durable goods for the US, which that report is usually not a big deal. Okay, but maybe you want to keep an eye on it. I don't have the timestamp on that, but usually that's around 10 a.m. Eastern time, but double check. Okay, if this particularly important if you're in stocks and stuff like that. Okay, so durable goods, and then there's the FOMC meeting minutes that is usually released at 2 p.m. or I think it's 2:30 p.m. Eastern time. Again, double check on that. Usually the FOMC meeting minutes are not really important because everyone pretty much knows what's going to be in them. But sometimes there are these little hidden surprises, okay? And then everyone makes a big deal out of them. And the market can have a dramatic move as a result, especially right now since the Federal Reserve has been, information around the Federal Reserve has been very sensitive. Right, the market has been very sensitive to it because of this rising rate environment. Right, so the point of that is, if you're in stocks or if you're in something that can, that reflects interest rate movement, that type of thing, you can see a dramatic movement if there are any surprises. So other than those two reports or three reports, there's really nothing else worth talking about. Okay, there's a bunch of other stuff going on, but it's not really worth mentioning because they're usually not events anyway. All right, so that's the economic calendar. All right, again, to mitigate risk. Now, before I get into my Bitcoin chart here, which you can see, I wrote a report on this that I published yesterday on TradingView. Hopefully you checked it out. I changed my format a little bit. Instead of making this long form 10 paragraph thing that you have to read, I realized no one reads. especially after looking at some of what these other fake gurus do. Some people literally put 5 sentences, and that's a report. So I just tried to like streamline mine a bit and just go right to the point on each thing. Hopefully you like that format. Now, what I want to talk about here in this section very quickly before I get to my analysis is I want to just say something about risk, okay? Just an important lesson that I want you to come away with. Again, risk control and respecting risk. Now, people say, yeah, I know how to respect risk. I just put a stop. But no, you need to understand risk, first of all, is a vague term, okay? What is risk? I mean, typically, when you translate it into markets, it means your potential loss. Now, no one really wants to care. No one cares really too much about a potential loss because we're here to win, right? Well, you need to focus, especially in this environment, on your potential loss. But yeah, sure, we all know that. So what's the point here? The point that I want to make is this. Risk is a proportion, or it can be categorized by the time frame that you're operating within. So each time frame has its own risk parameters. You need to know this. Not only do you need to know this, you need to respect it, okay? So let me give you an example. Here on my chart, real quick, I'm gonna use a chart example here. I'm gonna show you Netflix, okay? And what I wanna talk about real quick about this is this. Day trades have their own risk profile. Swing trades have their own risk profile, and position trades, which are like investments, also have their own risk profile. If you don't know one from the other, then the mistake that you're going to make is this. You start out with a day trade, okay? Or you have no definition of your time frame. You just take a trade because some fake guru told you to take a trade. So you take the trade, okay? The trade goes red. And you're like, oh, well, I guess it was supposed to be a day trade, but I'll wait till it comes back. So I'm going to make it a swing trade now. But still, you're not placing a stop loss order. You're just saying, well, if it goes, a little bit more against me, I'll get out. And then it goes a little bit more against you. Okay. And now you say, well, I'm going to, this will be an investment. It'll be an investment. And then I'll get out when it goes green. It'll eventually get green, and I'll get out. You just went from day trade risk, which is proportionally small, to investment risk, which is huge relative to day trade risk. Okay. So you need to understand that magnitude of risk before you take the trade. That's why I always tell people, know the type of trade you're interested in taking. And that's the type of trade, that's the type of opportunity you are seeking out in the market. Now, the signals that I typically share are swing trades. So they have their own specific risk parameters. If you don't respect them, they can get out of hand, and they can cost you a lot of money. Now, again, let me show you this Netflix example. Okay, Netflix, you all know Netflix, right? One of the main FANG stocks. Everyone buys Netflix because they tell you to buy it on Robinhood, and most people, oh, it's Netflix. I use Netflix, so I'm gonna buy it, right? So now let's just talk about risk profile. All right. Now this is a weekly chart on Netflix, and what I'm going to do here is I'm going to pull out this little highlighter, and I want to talk about this section up here. Now, of course, we're looking at this after the fact, so we can see the result. But when you don't know the result, and Netflix was here going back a few months, right? Going back to like November, December, when everyone was still in party mode and the Fed had not made their moves yet, or had announced them yet. That geopolitical stuff in Ukraine had not occurred yet. No one was calling for that. So everyone thinks, oh, I'm buying the pullback, right? My fake guru told me to buy the pullback. Here's the pullback. Okay, that's a fair assessment at this point because the structure is bullish. But again, this is weekly. So if you're thinking investment, right, which is typical of the weekly time frame, okay, that makes sense. But where is your risk defined? You can use these weekly lows on this chart. Now, if you had used something like that, that right there would have told you to get out. Okay, so if you made an investment, or perhaps you invested a small amount, or maybe it was such a small amount that you were willing to take a broader risk and say, well, who cares if this thing gets cut in half? It's Netflix. I want to own some. That's another story. But if you're like, no, I'm going to start out with this investment, but I want to put it in at a time where it's going to be somewhat stable, this would say right here, you're wrong and you need to get out. But if you don't have that properly defined, or let's just say, all right, forget investment. Let's just say you took a swing trade, because that would be a little more realistic. Oh, I'm going to take a swing trade, okay? And it starts to work out, and then you get that red candle right there on the weekly. The party's over, right? You take your loss and you avoid this, okay? But I'm going to tell you what typically happens. The novice mindset or the inexperienced mindset is this: it's Netflix. It'll come back. It'll come back, right? It'll come back, right? Right. And then it goes here. Okay, so you're in from 600, and this thing is now putting in a low at 351, a few weeks after. And you're still in it, and you're watching your account shrink, and you're like, all right, well, I don't want to miss the bounce, because if I get out and take this loss, I'm going to miss the bounce all the way back to 600, and I'm going to feel so bad. So I'm going to hold on. It's Netflix, okay? And then, you see some green action falling. See, I was right. It's going to bounce. It's going to bounce. And now you're here. Okay. No one sees that coming. The point is this: by not taking your loss early up here where the market said, take your loss early, you expose yourself to this entire thing here. Okay. That is what you need to understand about respecting risk. You open yourself up to that when you mix time frames. Okay. So that's all I wanted to say. Again, if you have any questions about that, let me know. Again, I want these streams to have a little more value, not just, hey, I'm going to show you some chart analysis and that's it. I want you to come away with something that you can also use as far as market psychology. Okay. And that's why, again, that's a very common beginner mistake. Don't mix time frames. Take your loss when your time frame tells you to take your loss. Okay. All right. So, and that's really more particularly for smaller time frames like day trades and swing trades going into position trade risk magnitude. All right, now let's get back to Bitcoin, because that's what we're here for. And oh, that's my messy chart. Okay, I want to show you my clean chart. There were a lot of levels on that chart, right? But most of you are not going to be concerned with those anyway. So let's talk about the levels that are in play right now, and let's talk about where we are. If you read my analysis yesterday, the headline on my analysis said 25K, possible 25K test, 25K support test this week with a question mark. Okay. Now the market was green when I wrote that. We were on this candle right here. You see that? And there was a buy signal when I wrote that. And if you read the analysis, I say the current buy signal doesn't count or doesn't fit the criteria of my strategy. So I'm going to ignore that. Okay. And now you can see why. There's no reason to buy this here at all on this time frame. If you were a day trader, there were other reasons, but we're not talking about day trades. If you were in a day trade, you should be out by now. Okay. But now this thing is red. This thing is in a consolidation, first of all, on this time frame, which is the daily time frame. It's the time frame that's appropriate for swing trades. Now, it gave back yesterday's candle, and it's about to take out that low. Again, my level still stands at 28.6, I think the level was, and it's this low over here, right? Well, that's 28.9. 28.6 is right here. Here, I'm going to draw a line there, okay? This is 28.6. You take that out, or if price takes that out, it opens up the possibility for the 25K, and that's this area right here. All right, that's why I drew this rectangle in there. So that is the potential, the momentum potential. Now, this is based on momentum. There's no fundamentals behind this. I don't care what's going on in the world. This is what the structure says and how it favors the momentum, all right? Price momentum. So momentum favors a test of that 25K area. This is good for people that are interested in shorting Bitcoin. As you know, I don't short Bitcoin. I'm not going to start now. If I want to short something, there are plenty of other opportunities. So I'm looking at the euro. I'm looking at gold possibly. I mean, that's all dollar based. But I'm looking at those instruments for potential shorts, right? The S&P and NASDAQ. There's so many other instruments. I'm not shorting Bitcoin. But people that have the ability to and that are interested, a swing trade is potentially setting up here for a short, okay? But unlike others, I'm trying to give you a realistic expectation of what to, how far can this short go? Should you hold it to 15K, like all the exaggerated big mouths are saying, or should you look for a proportional expectation? That is 25K. Now, keep in mind, this section up in here above, what this is just below 31, what is this level here? 32K, right? That's a lower high. So typically lower highs lead to lower lows, and 25K is likely to break. So although, again, there's no way to know in advance. Like I can't tell you with any certainty, oh yeah, 25K is going to break. Only a novice or someone that's just trying to fool you into something would tell you something like that. All right. There's no way to know. All I can tell you is that there's a better chance that it breaks. So that's part of the risk you have to take. If you take a short, okay, on that 28.6, okay, you take that short, your risk is going to be defined either by these candles here, the high of these candles, which is just above 30K, or if you want to use 32K, that would make more sense proportionally. Of course, it's higher risk. If the market reverses in your face, it's going to be more painful, but that's really where the resistance is, okay? That's why taking a short below this resistance, you run the risk of getting caught in a squeeze because price action is going to be more random in this area here, okay? It's going to be more random. It's going to be less random up here. So, but we may not get that opportunity, or you may not get that opportunity to short that area again. So you have to decide what you want to do. I personally, when I look for shorts, I mean, if I go for an aggressive short, like in another instrument like the S&P, I know what can go wrong. And if it goes wrong, I'm out quickly, right? That's all you can do. That's called adjusting. You don't sit there and say, well, I'm going to hold on to the stop. If there's a buy signal after you take the short, you get out because there shouldn't be a buy signal, all right? So that's the thing. This would be the conservative area up in here, right? 32 to 34K is your conservative area for short setups, if you can get that opportunity. If not, you're faced with an aggressive short if you're into that. And again, if you're not sure, don't take it. And if the short plays out, you're looking at possibly 25K or lower. So what do? If it touches 25K and your reward risk is greater than 1-to-1, you take something off the table. It's that simple. There's no more figuring out. It's like it's all set up. Okay, I'm greater than 1-to-1, I'm out of half. That's it. It's all planned in advance. If you're sitting there looking, well, what should I do? Then you're screwed. Okay, you should not be reasoning or wondering or thinking or being or self-doubting. You should not be doing any of that. It should all be in advance. But the reason why people don't do that is because if it gets to 25K, what's the first thing they think? Maybe I could make more. Maybe I could make more. George, what do you think? Yeah, I think we can make more. That's greed. Okay. If you're greater than 1-to-1, you take something off the table. Maybe you can make more, so you hold on and see if the market wants to pay you more. Otherwise, 1-to-1, there's nothing wrong with it. In this environment, especially, it's a tough environment. If the market wants to pay more, you give it a chance, but with a smaller position. So what? You make less money, you're still making something, right? If you think that mentality, but I need to make more, your own psychology will prevent you from getting anywhere in this business. Okay. Again, it's about consistency, not profitability. People like, they're always, I want a 99% win rate system. Even if you had such a system, okay, which no one gives away, by the way, and no one sells such a system. Even if you had one, if you are incapable of managing risk and you don't manage risk properly, no matter what you make, you're going to give it back. Okay, so it doesn't matter what you make. If you make $10, and then the next trade you give back $100, you're just wasting your time. Okay, so that's the key to the whole thing, is protecting your capital and always focusing on the risk first. That's why I say that. No one wants to hear it, but that's the reality. All right, so that's my Bitcoin analysis. So again, right now, I'm still looking at the 25K support test possibility for this week. You may have a short signal coming, okay? You have an earlier one that's about right now, what's this, 29.2? and price is right now at 29,246. So a break of 29.2 would be a break of yesterday's low. That's an earlier signal. And if you take that, again, your risk is defined by these highs or 32K. You have to decide. And then if it clears, you're looking for 25K. All right. And see what kind of price action you get there. It may reverse sooner. And you have to be prepared for that. You have to be prepared for the adjustment. All right. So that's Bitcoin. Let me start answering your questions now. Let's see what we have in terms of questions. How am I doing here on TradingView? All right, I got some people. And let me see, do I have some questions? Do everyone giving me a hard time? Okay, no, I don't see any hard time on there. Cool. Long form is much better. Also, comments to show that long format is more wanted. Barak, that's interesting. He's talking about my format. I spend like 2 hours writing those longer format, and my views are horrendous. They're horrendously low. So that just tells me that no one wants to read. Okay, and no one cares about the stuff that I write. I mean, that's what that tells me. Meanwhile, I check out some novice made up clown who only has 5 lines, and but they're putting out like 3 analyses a day or whatever it is. So they're putting out a lot of quantity and keeping people's attention, right? That's what they do. Whether it's right or wrong, it doesn't matter. What matters is they're constantly in front of you. And that's what gets the results. And TradingView is very happy with that because it drives traffic, and all they're interested in is getting subscriptions, right? I mean, that's the reality of their business. That's it. So that's why that's the reality. That's what I see. And whatever I do is wrong. All right. So just something that I appreciate the feedback. Okay. I mean, people, if you want to let me know what you like better, the long form or the short form, let me know. I mean, the short form I prefer the short form myself because it's a lot less time for me to produce. And, no one helps me do anything around here. So that's why it takes me so long to get stuff done. All right. Anyway, so let me see what we got here. All right. It's about, are you okay? All right. All right. So I'm going to start answering your questions. I'm going to start here on the other channel here. So Thomas, do you track your trading statistics? And if yes, how so? Which metrics? How often? Yeah, of course I track my statistics. How often do you update your trading strategy? Okay, that's a very good question. In fact, I want to show that question here so you guys can see it. This is from Thomas and the other channel. And how often do you update your trading strategy? So 2 questions here, right? Now, as far as which metrics I track, well, of course, P&L, right? I want to see my profit loss ratio. And also I want to look at my what's called it's the risk, the Sharpe ratio, because you want to look at how much risk are you taking for these profitable trades. Now, keep in mind, I'm trading multiple strategies. I'm not just trading one myself. I have the swing trades. I also have day trades. I'm not going to talk about day trades. They're aggressive and they're hard. But swing trades, again, no matter what strategy you are employing, you want to look at how much risk is taken per trade. So if you're risking 100 points, right, to make 50 points, that's not going to work over time. You're going to have a hard time unless you have a very high win rate, which again is not very practical on the larger time frames. So there's a few factors in play. But to answer your question, again, I'm looking at the Sharpe ratio and I'm looking at the P&L, and I'm also looking at the average profitability per trade versus the average pain, which is called maximum adverse excursion. That's what it's called on the platform. It's a common term. And I'm comparing those, okay? Because you want to see like what is like your average pain and how do those trades play out, because that can also give you some sense on how the market is trading. Now, again, when I talk about this, I'm not day trading like Bitcoin, okay? I'm looking at S&Ps, I'm looking at NASDAQ, I'm looking at stuff like that, futures. I don't, that if I'm going to day trade, that's where it's done, not here, not on Bitcoin. Okay, so just to be clear. And now to answer the second part of your question, how often do you update your trading strategy? Well, I update it based on the market activity. I'm going to take your question off. So the only thing I adjust on my strategy, by the way, are profit and loss expectations and risk. That's it. The reasons for taking trades, that doesn't change. I'm still taking for the same reasons that I took trades 5 years ago. I'm still taking trades for the same reasons because they're based on a market process, okay? A specific market process that I'm looking for to unfold, and it's momentum, reversal, and that's it, okay? That doesn't change. So what changes is, what should I expect? Are we in a bullish market? Are we in a bearish market? Are we in a tight range type of market? That type of information is going to change how I manage risk and how I should handle rewards. Like, should I let this run, or should I be really tight and take my money right away? That's what changes, right? Which is obviously not the reasoning for the strategy. Does that make sense? So good question. Now, how do you decide on a specific price to enter a swing trade? Beginner uncertainty makes, okay, so that's a common question. I can't answer it in specific details, but what I can tell you is how I decide on a specific price comes from my confirmation process. So I have a specific set of things that I look at that confirm the trade or not, okay? It's actually a very simple set of things, which I'm not going to go over here, but people are not satisfied even when I do share them because it's too simple. They're all expecting some sort of complex magical strategy that's going to give them the answers to everything, right? The key to the stock market. That's what they're expecting, but it's actually very simple. What makes it effective or not is the context that it's used in, and that's what people are missing most of the time is context. Just like, for example, you can look at a moving average crossover, right? That's a standard basic strategy. Moving average crossover. The short moving average goes over the long moving average, right? And that's a buy signal, for example. But it only works randomly. So what good is it? Well, if you put it in the right context, it can have some sort of value. It's the context. Are you taking that crossover at a major support level? Or are you taking that crossover at a major resistance level? Or are you taking that crossover in the middle of nowhere? Right? That's context. All right. So I hope that answers your question. Hey, Kai. Okay. Aussie Yen. Sure. So let me jump over to Aussie Yen real quick. Let me see what we got here. All right. AUD, USD. Oh, no. Yen, JPY. All right. So Aussie Yen, let's go to all right, we're on the daily chart. Let's take a look at what's going on here. So Aussie Yen, obviously a Forex pair, looking back a bit. So now keep in mind, Aussie and Yen, there is a relationship with the S&P. There is, okay? Now, the thing is this general structure is bullish, okay? The more recent, I guess we could say midterm, we can say is, this is, what is that? That looks bearish. We have a lower high and a lower low. We haven't made a lower low since. So this is sort of a mixed market. We can in fact say that it's range bound, right? This is sort of a consolidation because for quite some time, it wasn't going below that low, right? This entire area right here is a consolidation, then it breaks, and now it's still fooling around again. So I would argue that your midterm trend I would argue that it's range bound, okay? And you have a new range. Your range low is defined by that, okay? Your long term is bullish, midterm is range bound. These are going to be your range, support, and resistance levels. In fact, you can say you have one in here somewhere. Let's see, right around there. Okay, those are your range levels. Now, short term, you have this higher low in place. It looks like the momentum is changing, back to bullish. So what's the story with this? Well, if you take out this high right here, that lower high, right here, that would be a bullish sign. But you have to be careful with these cross pairs, okay? Because again, they're going to be a function of the dollar and the S&P. If the S&P and the dollar continue lower, or the dollar higher, S&P lower, then I suspect that this thing is probably going to have bearish pressure. So keep that in mind, right? Which means you're looking at these resistance levels as potential areas to go short on something like this for swing trades. That's how I would be treating that right now. This area up in here, just above this high, 91.16 area, right, where I'm drawing this rectangle here, that is a potential selling area. Now, we have a higher low, which is likely to lead to a higher high, but does the higher high fail? Does it fail right away inside of this zone? That would be an aggressive short setup, okay? Looking for another move back, at least into this area right here, okay? If not pushing the low. Again, you're likely to be affected by the dollar and the S&P on something like that. But those are these setups that I would be anticipating. Now, the market may not deliver what I just described. So what else can happen? You may get a breakout. I would imagine if you do get the breakout that you're going to see something similar in the S&P, okay? So if you do get that breakout, and it's a nice clean breakout, then I would say that looking for another higher low would be more reasonable, and that higher low could develop over in this area right here, right? Imagine the price goes up in here. Here, I'll draw like a little candle, right? You get this breakout up here, which you're not a part of. You're just watching, and you're like, oh, okay. And then it turns, right? It turns red over here, and then you get this test of support in here. If you get that buy signal in here, that would be a potential swing trade long. Does that make sense? Again, these ideas can fail, and that's when you have to make adjustments again. But right now, initially speaking, I'd be open to that short idea. All right. So I gave you some possibilities there. Does that make sense? All right. So good question, Kai. And yeah, Kai, I saw your answer on the community there. I'm sorry, I've just been occupied with other stuff that I have to do, since again, no one helps me. So I have to do a lot of this stuff on my own, and I have another project that I really have to, finish. I know that's an excuse. Yeah, it's none of your concern, but I will get to I saw your answer, and I appreciate you making yourself available. So I will change your role. Okay, I will do that. So again, thank you. I appreciate that help. All right, let me jump over to TradingView over here. Let's see what's going on, because I've been ignoring you guys. All right, hey, okay, Burak, I answered that question. Hey, G Simone, good to see you. All right, Captain. All right, could you please check out XU100? Okay, USD TRY. What is that? XU100. Okay, hold on. Are those two symbols? Let's see. XU1. Oh, it's Turkish stock market. Okay, against the Turkish lira. All right, so we're going to look at one. Now, keep in mind, they're inverse to each other, okay? Because we looked at this the week before. Burak we're making, I think it was some points we were making with him, because he's active in the Turkish stock market. And I was looking at this, and I was like, oh, yeah, wow, it's strong. But someone then pointed out it's because the Turkish lira has been so weak, right? And you're basically seeing inflation. This is what this is. Just like if the U.S. dollar was making low after low after low, the S&P would be at 5,000, right? So here's the thing. You get this pullback right now occurring. So compared to the Turkish lira, right? TRY, USD, what's going on there? So look at this thing. This is why everything is so strong, right? Or why prices are going higher in the Turkish stock market, possibly even in the Euro stocks as well. Have you seen the Euro? I mean, recently it bounced, but you have to keep an eye on your base currency, because that's going to affect things, okay? It's going to affect asset prices. So here's your Turkish lira. It's still looking weak here, right? There's really nothing bullish about this. It's on its low. You have a bearish pin bar right now. Yes, it's near lows. Let's take a look at a weekly real quick on something like this, just to get some more perspective. I mean, that's an ugly chart. There's just no way around that. It's ugly, right? It may bounce here, but there's nothing that says it wants to bounce. There's just nothing here. So when you see something like that and you don't have any other evidence, it's reasonable to expect a test of low. If the Turkish lira tests the low, then most likely your XU100 is going to go for the higher high, okay? This chart right here, most likely you're going to see that. So while you have this little consolidation over here, this is the weekly chart. I mean, look at this. This is a pretty relatively tight consolidation over the weekly perspective. And you have an old resistance right there. It's only one candle though. And then you have all their old resistance right here. So those would be your support levels going forward, right? And you're basically sitting on that one right now with like a bullish pin bar on the weekly. So those are all bullish signs. If you're interested in going long the BIST 100, this would certainly be a possibility here, especially if you take out the 2416. Okay, you take out that level right there. Going for the high is within reason, at least test of high, assuming the Turkish lira goes for that low, which it looks like it's poised to do. So that all makes sense. Again, things can change, right? So if this thing starts breaking, right now you have your support right around this level here. What's that low? Today's low, 23.46. You give it a little room. If that thing starts breaking, 23, I mean, look, we can measure this movement right here. I'm not going to go into detail about that, but you're looking at, if you start breaking like 22s, the high 22s, 2260, then the trend may be changing or the momentum may be shifting and you may see more of a consolidation. Don't think in terms of, oh, bullish or bearish, because a trend is not binary like that. It doesn't just change from one to the other. All right, on your particular time frame. So just keep that in mind. Okay, so good question. G. Simone, F a buy. Oh man, F as in Ford. Look, this is a stock, right? A U.S. stock, Ford. I can see why it's at a support level here. Let's zoom out a bit. Let's take a look at the weekly. Look where this thing is, okay? Beaten up with the stock market. Now, you look at the stock market today, oh, the Dow is up 600 points and the S&P and everyone's the stock market's going to be okay. No, the stock market is far from being okay, okay? It's too early to tell. So to answer your question, is Ford a buy here? Not on a swing trade basis. I mean, you have the support levels. We've talked about, you're better off buying at support levels than trying to buy breakouts and all that stuff. We've had that talk many times. But what's the problem here? The problem here is the environment is not supportive. So if we had a more supportive and bullish environment and you had some unnecessary sell-off, that's another story. We don't have that, okay? We're sitting at supports in an unstable environment. If S&P breaks, where do you think the Dow is going? Where do you think the NASDAQ is going, right? They're all going to break. So this thing is basically a market stock and it's likely to break. So as far as a swing trade, the answer is no. Even though you have a potential double bottom and all that other stuff, it's a lot less meaningful if you don't have the environment behind you, right? Now, as far as investment goes, I mean, how much is this thing? $12? If you buy into this, if you want to buy some inventory and hold on, keep in mind, this thing can go to 10, it can go to 8, it can go to 6. It's hard to believe, but it can do it. So you need to be open to that type of risk, and you need to go into it with that in mind. If that's the case, you buy small, right? You're not going to buy big, even though you have a potential double bottom, because there's nothing that says the market has bottomed, right? And that's a very important thing. People think, oh yeah, the bottom is in. Don't listen to people. Okay, this is about structure and momentum, and there's macro fundamentals that are working against you here. Okay, let's take a look real quick. What's the number one macro fundamental that I talk about and no one cares too much about? A couple of people care, like Kai cares. He always asks me about the bonds, but this is your number one macro fundamental, the bonds. Okay, this is 10-year futures, 10-year note futures, and while people are making a big deal, oh look, the bonds, they bottomed, we're going to be okay. They haven't bottomed. It's possible, but it's too early. We can't judge on this, okay? Why? We haven't cleared any resistance levels yet, okay? We tried, and yeah, there's a higher low. Okay, that's nice, okay? But this is a reflection of interest rates. Today's candle is certainly not productive, all right, in that regard, and it's likely to be a lower high. There's a sell signal developing here. You take out yesterday's, Friday's low. If you take that out tomorrow, you have a new sell signal in the bond market. If that follows through back to the low, there's no party going on here, okay? There's no stock market reversal. The bonds need to stabilize first. So that's why it's too early to tell. You can't view this on a one-to-one basis. You can't say, well, the bonds are green today, so the stock market should do the opposite, or the stock market should go higher. You can't do that. It's a process. It takes time. The bonds need to prove stability. Right now, we can argue that there's a range, okay? This is your consolidation in the bonds. We can argue that right now. You have a potential range high, you have a potential range low. If it can't make a lower low or barely a lower low, like a failed low, then at that point, we can argue that there may be some stability in the bond market. But even then, it's going to take the stock market 4 or 5 months to stabilize around that, which means you're going to have some rallies, but they're not going to go anywhere, right? There's going to be a lot more consolidation and stuff like that first. Does that make sense? So to answer your question about Ford, that's what you're facing, with something like that. So short term, no, it's not. I would not touch it. Longer term, if you want to collect some inventory because it's Ford, stay small because this thing can still get cut in half. Okay, I mean, real quick, let's just take a look at the S&P, because even though I believe Ford is a Dow stock, it doesn't matter. Wherever the S&P goes, it's going to go. Okay, this is the S&P. Everyone is hoping that this is the bottom. All right, but there's still plenty of potential for this thing. This thing could go, what is this? 20, 30, what is that? 35 and a quarter. Right now we're at 39. This thing can reasonably go another 400 points. 400 points in the S&P is a lot. That's a lot of money. Okay, so I hope that answers your question about Ford. All right, Nugget, thoughts on dollar topping out as okay. So good. Here we go with the bonds, right? Let's take a look at the dollar index. Now, the dollar index topping out, is this the top of the dollar? Is the dollar rise over? Way too early to make that judgment. Now, this is an interesting structure. It's an interesting pullback, okay? But I would not be bearish on the dollar just yet. The bonds haven't proven anything yet, right? Just like I was saying. So right now, I'd be looking for supports in the dollar. We are at a support level right now. It hasn't closed very well, right? That's certainly not a bullish close, but how does the rest of the week play out? Do we get an inside bar here? Do we get stability here and another rise? The bonds, as we saw, have turned back to the red side, right? So we may see some pressure, bullish pressure on the dollar as the week unfolds. We have to see. But I certainly would not be making any judgments on this. This is way too early. And if let's just say this was not the dollar. Let's just say this was something else, okay? Let's say this was Bitcoin, or let's say this was the S&P. If I saw a pullback like this, I would be thinking long, okay? I would be thinking, well, I want to buy this somewhere. Not at this moment, but I definitely want to buy this. So I'd be looking at support levels. And like I said, you have one right here. You have another one in this area here. So the dollar may, have some kind of significant pullback into this area, getting a lot of people on the wrong side, thinking, oh yeah, the dollar is going to pull back now. Everything is good. Chairman Powell is going to say he made another mistake and he's going to bring rates back to zero and everyone is going to be happy and we're all going to buy NFTs and get rich, right? That's what they're going to do, and they're going to get caught. Okay. So it's too early to make that judgment. Like I said, this game on the short term is not about opinions. It's about momentum, and momentum changes. It changes all the time. The skill is in adjusting to that change. Okay, if you want to say there's any kind of skill on as far as charts go is adjusting to the change. Skill in this game in general has to do with risk management. Otherwise, there is no skill. This is a game of chance. Okay, so keep that in mind and make that argument all the time. People don't like that argument, but it's true. Okay, that's what I've found in all the years that I've been in this. This is more of a game of chance than anything else, just like poker. All right, but there is some skill. You just have to know where it is. All right, why do you think that 25K is possible? Okay, so I explained that. All right, that was on Bitcoin. Let me jump over to the other chat here. Stian, all right, Alfin has made a new local high. All right, so Alfin, now Stian's been asking me every week. He asks me about Alfin. That's a nice chart. Okay, and I know you're in from you're long. I've just sold at 96 and looking for the next opportunity to buy back in. Okay, so I guess you got out of a long. Now, again, keep in mind, this is a Euronext stock, right? Don't lose sight of the euro dollar because, I mean, right now the euro looks like it's trying to break out higher, right? It broke this resistance. In fact, this is a potential area for a short, believe it or not, but there's nothing there yet. My point is this. The recent trend on the euro has been clearly bearish, right? So that's going to drive asset prices, European asset prices higher. Now, back to your stock. Is this thing topping out? Well, look, you got the double top, you got the pin bar high. Okay, euro is getting stronger, as you saw, at least temporarily. So that may bring this thing back a bit, right? If the euro can gain some strength. So what do you do? Well, look for your supports. If you want to buy back into this at a lower price, look for your supports. You have an old resistance right there, which is also basically halfway through this move. You have another support there. Okay, that's where your support is. So basically, you're looking at this area if you want to buy back in, or possibly this area. Now, the euro itself, right, is maybe a function of that. So keep an eye. If the euro starts pushing lows, then this thing probably won't pull back very far. Okay, you may get a buy signal earlier, perhaps it'll go for that higher high. You have to see. So just something to keep in mind. Okay. Now it's not, again, it's not a one-to-one relationship, but just something to, that can somewhat affect the position. Does that make sense? So those would be your levels to look for. What you don't want to do is don't get mixed up with it up in here. There's way too much resistance up in here. Okay. Don't get mixed up with it in here, because you're asking for trouble. Even if it pushes a little further, you're asking for trouble because it's going to be vulnerable. All right. Wait for, if you're going to do that, right, then let it really push. Let it go. Let it run without you. Let it do something spectacular. And then this level at that point, right, your old resistance will then become a new support. Consider at that point. Now that requires a lot of patience because you have to let the thing run away without you first. All right. But that's a lot better to do than chasing after it, thinking you're missing the big spectacular move, because all that chasing leads to losing. All right, just so you know, I'm not, I'm just saying in general. All right, anyway, so nice trade. Hope that analysis is good for you. All right, let me see what else we have here. Okay, all right, I'm just jumping back on TradingView. Now, by the way, people, when you type in new comments, like I'm looking back like an hour, so it may take me a little time to get to your comments. All right, so I appreciate your patience. Okay. Tro speaks. I really like when you said it's about consistency, not profitability. Are there any other words or tips when it comes to? Oh well, Tro speaks. I can talk for hours on wisdom. I mean, because you know why? I've made every mistake you could possibly make multiple times. So I can tell you a lot of what works and what doesn't work, and I can tell you most things don't work. All right, that's why I always say that. People don't want to hear it. Right? You go on YouTube and you get like, 1 billion views on some stupid strategy that's a random strategy, because people like to be lied to. Anyway, so yeah, I don't want to spend lots and lots of time on that. But anyway, let's move on. I appreciate your question. I prefer your short format personally. Okay. What are your thoughts on Rivian? Rivian. What is that, a stock? What is Rivian? I'm going to type it in here. Rivian. Rivian, I guess that's a stock on the NASDAQ. It helps if you could tell me if it's a stock or an altcoin, or just put the symbol so I can get it right. Anyway, this is Rivian, right? Rivian Automotive. What do I think of this? It's, first of all, I'm guessing it's an EV stock. If it's an auto stock, I'm guessing. Flavor of the week type of stock. Look at this chart. It's horrendous. All right, lower highs, lower lows, all over the place. Lower high right there. Potential lower high developing now in a market that's not supportive. Right? These will do better. These are growth stocks. They will do better in a speculative market. We are nowhere near a speculative market. So these you might as well buy Cardano. Okay, it's the same thing. It's garbage. So as far as investments go, yes, they're at better prices, but better prices are still possible. Not because the chart tells me that, because the environment tells me that. Right? Eventually, the environment will change. When the cycle changes, then these things will be more reasonable investments. Now, by the time the cycle changes, the bottom will most likely be in. So you're not going to get the best price. So is it better to try to buy that bottom, or is it better to wait for the cycle to change? And I'm going to tell you, it's better to wait for the cycle to change, even though you won't have the best price. If you have to buy this thing up here somewhere, because the bottom is in, at least you're buying in a supportive environment, and you're more likely to watch your investment go your way, okay, than push another low and get stuck in the thing, right? You're better off watching it go your way. So that's why I say that this is not about getting the best price. It's about aligning with the right environment. And that, just knowing that alone, like I was telling people back in December, right? S&P was making new highs. And people were asking me in the chat room, should we invest in it? I said, stop investing. Of course, they don't listen to me because they think I'm just, some angry bald guy. but stop investing. Stop investing. Why was I saying? Because I saw the dollar rising and rising and rising. I'm like, this is going to bite into the market at some point. Okay, it's not a one-to-one thing. The market was vulnerable, and here we are now, months after, and a lot lower in these markets. So I saw the cycle turning the other way. I wasn't going to touch anything, in that environment as far as investments go. No way. So we'll see the cycle turn the other way again, and I think we'll get our first clues from the bond market, and then talk from the Federal Reserve. That's where the first clues will show up. And again, comparing those two, it'll be the bond market before anything else. Okay, that's usually when the clues show up, and the bond market will be months in advance. So the bond market may turn, and the stocks may still make another lower low. All right, so just keep that in mind. I say it, but it's going to go in one ear right out the other, especially when emotions are involved. So, any good question? All right, let me see. Freeloader, any comment on oil continuing to strengthen? Okay, that's a good question. Alongside a strengthening dollar, since this isn't an expected correlation, what can we expect from oil dollar going forward? And with an expected interest rate hike in June. All right, so the expected interest rate hike, just for the fact that you said that, means it's priced in. Okay, so if the rate hikes are priced in, let's take a look at oil. Oil has been acting unusually strong in the face of a very strong dollar, right? So, but oil is geopolitical, and there's a lot of political sensitivity to oil. So we can't apply those typical market relationship factors or market relationship logic that we would do with other instruments when it comes to oil. So again, oil, you're just looking at momentum here, right? This is pure momentum. Don't have opinions. Let's look at the structure. This structure on oil is a broad higher low, okay, in something that is generally bullish. So I would still be looking for longs in oil. There's really nothing, there's no reason to go short this thing yet. I would think with the strengthening dollar generally that this thing would be weaker, but it's not. So you have to follow oil, right, on its own, because obviously it wants to do its own thing. So as far as going long, where to go long? Well, you have to find your support levels. You have support there. You have support right around there. Now keep in mind, again, it's very sensitive. So it's hard to use the dollar relationship. We saw that pullback on the dollar. Oil, I would think with that type of pullback, oil should be up here, okay? But it's not. So what's the story with oil here? What's the problem? So don't get caught up in that logic. Just wait for a support level if you're interested in a long, and look for your setup, and perhaps you'll have a long in oil as long as the structure continues to stay intact. If oil starts breaking supports, which is possible, all right, you're looking at a break of 102. If oil starts breaking and you're seeing oil here and it's not reversing, then and the dollar is still going vertical, then maybe the dollar is biting into it. At that point, then it would be more reasonable to be expecting lower lows from oil and trying to sell into lower highs if it gets there. But until it does that, we have to assume that it wants to stay in this range or continue higher. So in that scenario, you're looking to buy supports or reversals at support levels, right? And that's pretty much it, and define your risk from there. I hope that answers your question. But again, people like to get very opinionated with oil. People, like to jump all over the news on oil, all this oil. Don't even bother, okay? It's all just a big ball of confusion. Follow the price, because that's the reality. That people are voting with their dollars, okay? So that's what oil is a reflection of. Pay attention to price, no opinions. Okay, so good question. All right, I skipped the question here. Gupta, hey, good to see you. Could you please check Tata LXC? Okay. All right, let's see. That must be an Indian stock, I'm guessing. Let's see. Tata L. All right, let's see. Yeah, okay. So it's Indian. Let's see what the story is here. I'm going to go to a weekly chart. Okay. Now, that's a decent, look at that trend. Maybe that has something to do with the rupee. I don't know. I don't track the rupee, but if it's getting weaker, that would make sense. That's a nice looking chart. Okay, clearly bullish. Now, what do you do here? If you're long something like this, This actually would be a good place to take something off the table because a lower high can easily develop there. But at this moment, there's really nothing to do. I wouldn't buy that, and there's no reason to sell it. Okay. So as far as like longs and shorts, if you're looking for longs, you should be looking somewhere in this area, all right, somewhere in that zone right there, possible long area. Or if it gives you a failed low, that would be somewhere in this area, right? Those would be potential areas to be looking for longs, long setups, if it can pull back. If this thing does not pull back, which is always a possibility, and you're looking at going into this zone, don't get sucked into buying that. While it may look good for the moment, you have this up here, okay? And theoretically, a higher high is within reason, but you don't want to be the one to push it up there. You know what I'm saying? You don't want to be the one to help drive it up there. That's a very vulnerable area for new longs. It's a great place if you're long to get out, right? And that's what smart money usually does. They unload in those areas to people who don't know any better. So don't go for that breakout. I would not suggest the breakout, even though it may work. You want to look, again, the risk, not the reward. Where is the risk low up here? No, it's not low. Okay, the risk is high up here. Where is the risk lower? Up in I should say, not up, but lower in these areas here. Okay, so it's a matter of waiting. I don't know if you'll get that opportunity, but if you do, that's where you should be interested, waiting for long signals and measuring your risk from there. Does that make sense? Okay, again, like I said, these opportunities don't always come about. It's being prepared for them if they do, not reacting to what you see at the moment. All right, so good question. Let me jump over to the other chat. All right, how am I doing with time here? Okay, I'm going to really try to stick to my schedule, and so I'm going to go for a few more minutes. I'm way back, man. I'm still like catching up here. So Joel, okay, hold on. I'm just jumping across. If I skip your question, I apologize. Looking at, can you look at IEP? Seems to tank, right? Okay, IEP. Is that a stock? IEP? Let's see here. Okay. Oh, yeah. All right. So let's go to the weekly. Again, look at this. This thing's a mess. First of all, look at this consolidation you're in. Okay. This chart, we just looked at, that Indian stock, Tata, Excelsi, whatever the thing is called. That was a beautiful looking chart. Okay. Compare it to something like this. This thing is a mess, right? I mean, what do you do with this? So first of all, there's no clear-cut trend here. This is a weekly chart, right? This thing is all over the place. And if anything, you have potential lower highs developing. Even though you're in a consolidation, you have lower highs. A strong stock shouldn't be doing that, or a good stock, right? You're likely to break those lows. So I would, if I was interested in swing trades, for one, I would find a better stock, right? Because this thing is likely to break. And as you can see, it's very random. It's all over the place. So there's no direction. Why bother, right? So, I mean, that's what I have to say about that. There's no clear-cut momentum. If I think it's going to break, then why not short it? Because this thing is not, it's consolidating. It's highly random. The short may not go very far, right? So there's no point. If you're going to short something, you want to short something that's clearly at a resistance and has that bearish potential. This, your range low is right here. And if it breaks, I mean, yeah, you could say your next range low is there, but there's just better stocks out there or better instruments to work with. All right. So I hope that makes sense. I wouldn't, as far as company reports go, they're just going to give you an opinion. Okay. We're judging momentum here. So let everyone else figure out the relevancy or the value of the report, and then let them vote with their money first. That's why I always tell people, let the market make the first move. We want to be prepared for the second move, right? The move after it makes its first move, it goes to a resistance, it goes to a support, and then we want to be prepared for what can happen there. We don't want to step in front of it. We want to be prepared for what can happen there, meaning you're waiting for some type of setup and confirmation before you take the risk. Does that make sense? Okay, so thank you for asking. All right, let's see here. I got another guy here. Okay, short format is preferable. All right. If you are not patient enough to read 5 minutes, then you are maybe in the wrong business, or am I wrong? Okay, so another guy saying long format. All right, that's interesting. You're 100% right, Ali. If you're not patient enough to read for 5 minutes, then you are in the wrong business. But you have to understand today, just look at a general gauge of people's attention spans. If you want to call that some sort of correlation to patience, look at the popularity of TikTok. Okay, I don't watch TikTok, but I've been researching it a little further because it's a place to put content, right? But they suggest 8-second videos. 8 second, because people want to move on to the next video. 8 seconds. That's ridiculous. But it had me thinking, can I make like 8-second videos? I was just thinking though. Again, I'm not doing anything on TikTok just yet. My point is, patience is like the thing that you should all have, but it's everyone's worst enemy in this game. People don't have patience. You see the market looks like it's going to run away without you, you jump in because your emotions make you do it. It's a lack of control over your emotional system, right? If you want to call it that. When you're, losing money, the typical reaction is, well, I'm going to hold it and it'll come back. And then it doesn't come back and half your account is wiped out. And then the market just looks really ugly. So now you react, you bang it out, and that's when it bounces. It never fails, right? This is a conspiracy. The market maker knew my position. And that's what it feels like. And then we like to fool ourselves with all those thoughts, but it's just human psychology playing out. That's really what it is. Okay. So I appreciate your answer there. Okay. Let me see. Any comment? Okay. So I got oil. Okay. The long format. All right. Just jumping back here. The long format being mentioned is not about the trade details. It's about his out of price, his out of price lessons. Check his previous about market psychology, how to think, absorbing his thought. Oh, I see. Okay. So they're talking about the educational value of my trading view. And that's my long format has more educational value, which again, I haven't gotten much great feedback about, but Burak is saying that that's the value of the analysis. So I appreciate that. It's good to know. Okay, let me see what else we got here. Man, I'm so behind. Peter, okay, good to see you. All right, waiting for a good retrace. All right, hey Wedge, good to see you. Wedge from New Smyrna. He's always hanging out on the beach there. And I'd like to do that. Hey, Will Weiss from London, right? He didn't have to put that. I remember. Okay, Winter. Okay, good to see you. Will. All right, Marcy baby. I guess it means Marky. Marky baby. From Dorset, UK. All right, cool. I guess what they say, that's how you call me over there, Marky. All right, it's fine. All right, London, it's cool. You guys drink tea. That's all right. Let's see. SD Trader. Hey, cool, good to see you. All right, Alex, I'm just catching up here. Where's Alex over here? Okay, I'm gonna be okay, no problem. Thanks for stopping by. All right, here's a question. AMD is a good buy. AMD is a market stock. Oh, look, I have an old trade in there. I think that got stopped out. That was a while back though. Let's take a look here at the daily chart. Now, again, AMD is a market stock, okay? And AMD is going to follow the NASDAQ. So is AMD a good buy? As far as an investment, I'm still not open to investments. Not until I see the bond market prove something to me to prove otherwise, because I'm going by the bonds to time as far as generally when the environment may be changing. Right? And a stock like this is going to be completely sensitive to that. So as far as investments, no. As far as swing trade, well, look, you're still fighting the recent trend. We can argue is it's fighting to be bearish, right? You have a lower high right here. It's slightly higher than this high, but barely. It's still respecting the resistance, okay? So you have that problem. This lower high can easily turn into a lower low. Let's take a look at the NASDAQ, because that's what you're dealing with. When you're dealing with AMD, you're dealing with the NASDAQ, all right? Now look at the NASDAQ. This thing, while it's trying to bounce today, man, it's got a lot of work in front of it, okay? It's got a lot of work to prove that this thing is no longer going to go lower. So while AMD may be trying to bottom, so is the NASDAQ. When the NASDAQ starts to prove itself, if it can, then most likely a bottom will be established in AMD. The goal is not to buy that bottom because it's very expensive trying to figure out where that bottom will be. All right. It may be the bottom it's in place right now. It may not be. And there's no way to know in advance. So what I suggest is wait until the NASDAQ proves itself first. Let it clear these resistances. AMD, of course, is going to be higher, but that's not the point. The point is you want to wait for the environment to improve. At that point, if the NASDAQ wants to put in another bullish leg, meaning the NASDAQ wants to work its way up into here, right? Like off after breaking out of this resistance and it wants to work its way. Okay, then at that point, inside of that range of the NASDAQ, AMD would be more likely to be a swing trade long, okay? Swing trade, not position trade until the bonds prove otherwise. Does that make sense? So that's what I'd be looking for. Yes, it requires patience. If you want to take AMD sooner because you want to be more aggressive, well, at this moment, it's still a tough spot. In this situation, since the NASDAQ has not proven stability, I'd prefer to wait for a failed low, if anything, okay? Either wait for the failed low or wait for the breakout and the next higher low. This higher low, while it is a higher low, is a higher low that's in the context of a not so supportive environment. So why take the chance? Does that make sense? I mean, it's a buying setup, but it's extremely aggressive in an environment that doesn't favor it. And the environment carries weight. All right, so good question. Let me jump around here. Okay, hold on. Okay, is this right? Okay, just catching up. Okay, what do you think is going to happen first in BTC 25K or 35K? Which is going to happen first? Well, I have no idea because I have no opinion. But based on, when I say I have no opinion, it means that I don't have any long-term opinion or I don't think something is going to happen before something else. I go by what the market structure tells me, right? And this market structure, still, like I said before, here, let me get to the cleaner chart here. This market structure says bearish. So I have to guess based on the market structure because the market tells me what to think. I don't think for myself. The market tells me what I should think, okay? And the market changes. So I have to change with it. Otherwise, I'm wrong. And losses result from that. Now, based on this market structure, I have to guess that 25K is first, okay? Because lower high often leads to lower low. We're not in a supportive environment. Bitcoin is a speculative asset. We have no speculative money coming into this market. Understand, these things don't trade in isolation. You have to be aware of your macro environment. Is money flowing in or not? And right now, there's really no evidence of that yet. The Federal Reserve can change their tone and they can invite the money in, but they haven't done that yet. So until I see that, I have very little optimism about anything that's highly speculative, meaning penny stocks, growth stocks, altcoins especially are garbage. Bitcoin, they're not going anywhere. All right, so something to keep in mind. Pay attention to the bigger picture. All right, so good question. Let me jump over here. All right, so a couple more minutes. DJ, good to see you. Hey, Travel, good to see you. Solana, Sabri, let's take a look. All right, USDT. Okay, again, very similar to that Bitcoin chart. These altcoins are in trouble. I'm just being honest. Okay. I've seen, again, they still make those hype videos, and I'm sure there's chat rooms all over the place pushing these things, and there's no speculative money coming into these. So yes, they are at attractive levels. I'll give you that, but they're not in a supportive environment, which means they can get more attractive. All right. So I'm not for these yet, even though structures are trying to develop because, oh, but look, there's a little pop up here, a possible high or low. Right. But it doesn't mean anything. Right. This thing is poised to make a lower low. So if you're interested in investing, for one, I'm not a big fan of these. So I don't want to put fear in you, and I don't want to give you the wrong idea. I just want to give you reasonable expectations, right? So what's reasonable about this is it pushing another low. That's within reason because of the Bitcoin structure. These things follow Bitcoin. So if Bitcoin breaks, this is going to break. So should you invest here? Not big. right? Tiny bite. How much is this thing now? $50. So, like for example, if you have $10,000 to invest, should you invest 5,000 here? No. Why would you invest 50% of it in an area where this thing could go to 25, possibly? So you invest tiny, $100 out of 10,000, right? I mean, that's a tiny percent of 10,000. So if this thing goes to 25 and you've only invested a few times, maybe you invest once a month, you stick to some kind of schedule. Okay, no matter what price it's at, you buy $100 worth out of your 10,000, and that 10,000 stays out of the market until each month. It's going to take you years to get through that. I'm exaggerating, but you understand what I'm saying. Your money will not be exposed if this thing keeps breaking. Now, if you stick to your schedule and a bottom develops in the market in general, and speculative money starts coming back in, you will see bottoms develop and they will start to go. But keep in mind, this move right here looked like that, right? Stability, started to break resistances. But what could have kept you from getting caught in this? Because keep in mind, what proliferates this are a lot of big mouth fake gurus. They have their large communities. They push, oh, it's altcoin season again. And they all start pushing all their people into altcoins. Fake gurus are incentivized to do that. The industry loves it because they create more money for the industry. Who gets screwed is the investor, you. You're the one that should be concerned and trying to clean up fake gurus. The industry is not. They love them, okay? So keep in mind, how could you have stayed out of something like that when, hey, it looks like it's going to run away. The bottom is in. This thing's going to 100x and all that other nonsense. Look at the environment, right? The bond market had not changed during this time. The bond market was still pushing lows, which said that this is not going very far, okay? Keep that in mind. You say, oh, the bond market has nothing to do with altcoins. The bond market's the bond market. Bond market is where speculative money comes from, okay? That's where the party begins. So if the bond market is not supportive and the bond market continues going lower, I don't care how many rallies show up in these things, they're not going to go very far, right? So that's why it's so important to be aware of your macro view and not just isolated on a chart, because these things are affected by other things like interest rates. Why? Because interest rates create free money or they don't, okay? All right, let me jump across here. All right, a couple more minutes and then I'm wrapping this up. I know I keep saying that, but I am for real. All right, Jamesy, listening from London. All right, Jamesy, cool. I got my London people in here. So I have a competition going on here between Romania and London. All right, I didn't realize I'm getting popular there. I'm gonna have to change my accent here a little bit. Some stocks have come, how much lower can they really go? I mean, you could really talk from $2 or $3 from a high of 50. All right, so again, those are speculative stocks. So you want, just like this talk about Solana, it's the same story. They can continue lower for as long as they want to. So there's no trying to guess where the bottom is, right? The bottom will develop when the market finds a bottom, all right? So again, like with the S&P still has plenty of room. It's still plenty vulnerable. That's not a bottom, right? It eventually can turn into one, but it's not a bottom. By the way, that Solana move looks very similar to this. So that was like a market-wide thing, right? Whatever that was. So keep that in mind. This is not a bottom yet. It's a short-term momentum reversal, yes, but it's way too early. The environment hasn't changed yet. The environment changing is not like a couple of day thing. It takes months, like 4 or 5 months to really prove a change in the environment. And you're going to see a lot of movements throughout that time. So you have to keep your eye on that environment. All right. So I hope that answers your question. It can go lower until it stops, right? Until the environment starts to invite the speculative money back in. It's going to take time. All right. Okay, no problem. James from London. Okay, got you. All right. With the current environment, should short trades be the way to go? All right. So James, that's a good question. They are obviously the aggressive side of things. But short trades in what though? Because if you're going to go short, I prefer things like the S&P, a currency. I don't short Bitcoin, but like, something like Forex, euro, whatever, because those they're more orderly, they're more stable. Shorting a stock can be very problematic. Okay, so that's why I don't bother with stocks. If I'm going to short the stock market, NASDAQ, S&P. If I'm going to short other things, euro, pound, Aussie dollar, dollar franc, right? That's what I'm looking at, if anything, and they're very short term. So as far as shorts go, think of them as just quick swing trade type things, because when the market reverses, people are itching to buy. So you can get some very sharp and very painful rallies, especially if you get opinionated. You don't want to be opinionated on the short side. You want to be quick about it. If you can get 1-to-1 or more, you take it and get out, right? And wait for the next resistance and play it that way, because when it reverses fast and sharp, and you don't want to get caught in those. It's very painful. Okay, so anyway, good question. All right, so let me just see. I got a couple more minutes. Let me just see if I can answer one more question. Still as handsome, go forth. I wish women would say that. Okay. Yeah, I don't get that from women for some reason. Loved your new okay. All right. So I got some more feedback there, straight to the point. All right. I enjoy the long more. Okay. Armin. So I'm getting some good feedback. I mean, it looks like a mixed view. Some people like the long format. Some people are saying more to the point. All right. I mean, I'll tell you what the real solution is. I need to do more reports. Okay. I mean, I should be producing, some of these monkeys on here are producing 3 a day of like those quick one-liners. And I'm like, man, 3 a day. I can't do 3 a day, but that's what I have to do. Or I have to produce 3 or 4 streaming videos a day. A lot of these fake gurus, I notice, that's what they do. It's a lot of content. I'm only producing 1 of these a week. No wonder why no one follows me. All right. Well, I personally prefer the new format. Okay, Peter. If you want, okay. Kai, no worry. Okay, no problem. Just catching up here. Catching up. David, can you have a BNX? Okay, from Antalya, Turkey. Okay, cool. All right, got my Turkish people in here. Okay, so let me jump over here to BNX. So against the dollar, what is that? Let's see. Okay, BNX. Now, again, maybe this has something to do with the Turkish lira situation. I'm not familiar. What is this thing? BNX. Okay, anyway, it doesn't matter. Let's look at the chart. So here's the weekly chart. Wow, that's interesting. It started out, gave back a ton, right? And now it's been trying to work its way back. So short term, or midterm, the momentum this is bullish momentum, right? You have a higher high on the weekly chart. You have an inside bar developed here on your previous current candle. It's still early, but that could become a new sell signal within a bullish structure, right? That's the first thing. Let's go to the daily chart. So with that being said, you want to see support and resistance levels, right? Really quick. You have a support there. You have a support right around here, and you're at one now. Okay. Interesting move with this vertical candle. So what do you do here? This daily candle looks like it's trying to develop a new sell signal, but right inside of a support level. So you ignore the sell signal. I mean, I certainly wouldn't be selling into a support level if this was something else, like let's say this was the S&P. So watch this area in here. What is that? 105. Okay, and this is in dollars. So 105. Look for that area. If you can get a reversal, a bullish reversal of some type. Yes, it's right in the middle of this zone, but if you're looking for a swing trade, this is an area where you may get like a test of this high up into here. It's possible to see something like that. It is aggressive because you're coming out of this consolidation, but that can be this. What you have right here is you have like the breakout and the pullback, right? And I talk about this a lot with some of these other charts we looked at, where I said, hey, if it, wait for the breakout, don't buy the breakout, and then let it pull back. Well, here it is, right? This is that type of situation where you have to be patient. Here's the breakout. You waited, and now look, it's retesting this old resistance, which can be a new support level. So that's a valid play. If it pushes a little lower, okay, it's still valid because why? Because you broke out first. Does that make sense? Compared to buying when it looks like this. Here, just cover that up, right? So when it looks like this, it's just a consolidation, no break, like failed breakout over here. So, should I buy this pullback into the midpoint of the That's 50-50, right? That's 50-50. There's no breakout in play yet. Here, the breakout is in progress. It's broken out, and now it's retesting. That's another story. Does that make sense? That's, comparing one situation to another. Buying on the next buy signal would make more sense. In fact, look at this. You had a buy signal, just the day before? I guess this is Thursday, and it failed because you shouldn't see this red candle, right? Let me just point that out too, because this happens all the time, especially on smaller time frames. So there was a buy signal back here. This is a buy signal right here, okay? Nice little pin bar, break of high. It's a long signal off of a support area. Today, you're like, it turned red. This should be exiting. You should be exiting the trade. Like, not see you personally, I'm just saying an example. If you had taken that long, this would tell you to get out. There's no reason to stay in this because the buy signal is no longer in play. The next candle after the buy signal should look like this. It should be green. It should look like that, not this. That's how you know to adjust. Yes, you will have to take a loss in that situation, all right? But it's better than trying to hold on and having that small loss turn into something unmanageable. Does that make sense? So good question on this BNX. All right, people. So I got to wrap this up now. Again, if I missed your question, I apologize. Hey, Dan, good to see you. All right, thanks for stopping by. Ying from Spain. Hey, all right. Any input? Okay, yeah, I got to wrap this up. All right, Walmart. I know Walmart got beat up recently. Yeah, they had like a bad report or something. Okay, but again, look, Walmart is just catching up to the stock market situation. Look at this on the weekly. Look at this. That's a failed low area. But you have a bad, the bad environment may be catching up to Walmart, and you have this momentum. So I wouldn't buy Walmart as far as a swing trade. No way. It's obviously it's a industry leader. It's generally a good stock, So you're at a low price. If you're interested in some inventory, again, I would not recommend piling in small bites, something that's manageable, because if the stock market continues lower, right? With this type of move in Walmart is likely to see some more weakness or momentum continuation, right? A lot of times you don't get just like a nice clean bounce and it goes right back up. We're not in that type of environment, all right? So just something to keep in mind with Walmart. I hope you understood that. All right, so people, I'm going to wrap this up. Again, I want to say that I appreciate everyone here that spent their time with me here today. Thank you for the feedback on my TradingView reports. I mean, maybe what I'll do is for now, I know I should be getting more reports out, but perhaps I'll mix it up. Maybe one week I'll do like a straight to the point, and other times maybe I'll do more of a long form one. But overall, I have to go by what's effective because I waste a lot of time doing things that don't produce anything when it comes to content. Anyway, and now that I don't have anyone helping me with stuff, then it's not a good use of time, because this business, as far as like you want to call it the guru business, is not a fun business. I can tell you, especially when you're honest and you don't lie about everything. So let me see what else here. Okay, so I'm going to wrap this up. Oh, okay. Who do I have here? My son from Afghanistan. Hey, welcome. It's good to see you. All right, people. Brussels, move the show a few hours if you can. Oh, I know. Well, 3:00. I mean, I'm not going to do it earlier. We're in the middle of the market at that time. But anyway, thank you for the suggestion. Okay, people. Does Bitcoin still follow? Yes, it does. It's still following the S&P. It's not a one-to-one thing because the S&P is green today and Bitcoin is not. But in general, S&P sells off hard, Bitcoin's selling off generally. Okay. So anyway, S&P has, so it's not one-to-one. Don't treat that relationship one-to-one. It's a broad thing. All right, so I want to thank you all for spending some time with me here today. I know I keep saying that. I hope you got something out of my stream. Again, I want you to come away with a lesson on top of being prepared for these potential scenarios and coming out with a sense of confidence and control over, what you can do in the future if the market shows you particular scenarios. Okay. So again, thank you all for your questions. If I missed your question, please come back next week. I stream every Monday at 3 p.m. Eastern time. All right. So you can come back and ask your question again if I missed it. All right. Otherwise, if you could press the like button or subscribe to my TradingView profile or the YouTube thing, whatever, I really appreciate it very much. All right. Also, thank you all very much. Enjoy the rest of your day or the rest of your evening, wherever you are in the world. Thank you very much for watching.